I easily see it in the cycle hitting a peak of 200,000. Then everyone will be out over their skis and a lot of people will be levered up, and then we'll have a cleansing downturn, which will probably bring it back down to 100 or so.
Lepard highlights Bitcoin's cyclical nature, referencing its history of sharp price surges followed by corrections. He predicts that Bitcoin could reach $200,000 in this bull cycle before a correction brings it back to around $100,000. This prediction stems from his use of the power law model, which charts Bitcoin's price movements in standard deviations from its baseline over time. With 5 such cycles already documented, Lepard sees this pattern as reliable. He emphasizes that Bitcoin represents digital sound money and is well positioned for a world increasingly moving toward digital solutions. However, he cautions against over-leveraging during its peaks, urging investors to approach with a balanced strategy.
Please take a little time to like this video, subscribe to the channel, and turn on post notifications for more videos like this. You can also check out our other videos on cryptocurrencies and the overall digital asset space and drop your comments and observations in the comments section below. Everything you do helps with the YouTube algorithm and immensely contributes to the channel's growth. Thanks and enjoy the video.
If you look at history and if you look at the cycles and you look at what tends to happen when it runs, and it does one of these runs, it tends to go 4x the base. The base was kind of 50 or 60. So I easily see it in the cycle hitting a peak of 200,000. Then everyone will be out over their skis and a lot of people will be levered up, and then we'll have a cleansing downturn, which will probably bring it back down to 100 or so. I'm still comfortable buying it here and have bought some here. But as it goes higher, I'm pretty loaded up on it. I probably won't chase it into the 200-300 range. I know there are people who think it'll go to 300, 400, 500, and that's possible.
But when does it stop, and how dangerous is it?
Well, that's the thing. I like to use a model called the power law model, which is a log of time and a log of price, and it kind of has a baseline. And what it shows is that it tends to go 1 to 2 standard deviations above it on these bull market runs, and then about 1 standard deviation below it when it corrects. And that's, you got 5 of these cycles now since inception. So if you get on Twitter and you go to Fred Krueger's site, you can see a lot of that, and it's very well mapped out. And so you can kind of get a sense of what's likely to happen to the price. I think they're both forms of sound money. It's analog sound money and digital sound money. We're moving into a digital world. I do think Bitcoin will ultimately prevail. It's going to take a lot of years, decades, but it's going to happen in my view. It's a smart thing, in my opinion, for the U.S. to lean toward the Bitcoin side. And the reason is that China and India and the Middle East and Russia have all been large accumulators of gold. And so it would be kind of a 3D chess move for us to say, oh yeah, that's great. I'm glad you guys all have that metal, but we're going to support an underlying sound money standard based on Bitcoin. And by the way, we happen to be leaders in that area, right? My top assets are just all around are just gold, silver, and Bitcoin. Right now, probably of those 3, silver's the cheapest. It's kind of stunning to me that silver hasn't done more than it's done, particularly given all the new applications that are coming out. We need solar, and this solid state battery stuff will start to kick in eventually. And so, and it's underperformed massively. Now that's partly because the stock to flow is higher than gold, but I like them all. I like all 3 of them. I don't like stocks that much. Commodity stocks and foreign stocks. Proctor just had a nice chart showing how cheap international stocks were compared to the U.S. stocks. And I just hate bonds. I just don't see them. And I know there's some people who think, well, you'll have a deflationary collapse. You'll be really glad you own a 30-year because you'll be locked into a return when there are no returns anywhere. I just don't see them letting a deflationary collapse happen. Now, it's possible though that it could overwhelm even the printer, and you could get outright deflation. I don't know. It's a messy situation. The gold stocks, as you know, and as I've talked about other podcasts, really haven't responded the way they should have. Gold's up 30%, the stocks are up 30%. Typically, the stocks are 2 to 3x the gain of the underlying metal. And in this case, that has not happened. And the reason for that is if you go on Bloomberg and you check the future forecast, nobody thinks the gold move is real. Everybody thinks, oh yeah, it's at 26, but it's coming back to 2,000. And the ASICs, which is the all-in sustaining cost of mining an ounce, are going to continue to march up with inflation. $2,000, pretty soon your margins are gone, right? And so what's got to happen is there's got to be a shift in psychology where people say, oh, this is the real deal. And gold's not stopping at 25 or 26. Gold's going to 3, and then it's going to 4, and then it's going to 5. And I think those things are happening, obviously, over a course of several years. But until they get this fiscal thing solved, and it's not an easy fix, To me, it's very, very clear that we've got inflation in our future. There's no bigger gold bull than me. I mean, I think we're going to 3,000 within the next 6 months. I think we're going to breach that. We need to. Gold is so deeply undervalued; it's insane. It needs to be in a different zip code. So I see 4,000, 5,000. At the end of the cycle, it could be 20, 40, 50. I mean, which sounds absurd, but it's not. It's really not. I mean, if you take it and if you did the math the way we did it in 71 when we were on a gold standard, Brent's done this actually, you need to be at $79,000 per ounce gold to balance the out. And that's assuming we have the 261 million
Dive
ounces.
into that a bit. Break that into it a little bit.
So just take the broad monetary aggregates from the 60s. Right. Divide, U.S. theoretically has 261.5 million ounces of gold, okay? And I say theoretically because, Ron Paul personally said to me, I'm sure we don't have it, okay? So, but all right, fine. Let's assume we do, okay, for the sake of argument. And it's in the Treasury. The Treasury owns it, and they could mark it up. They could turn around, and this is what Luke is proposing, and it's a smart idea. They could mark it up to some saying, we're going to go back to a gold standard and buy and sell at that price. But anyway, back to the math. Back in the 60s, early 60s, before we started the Vietnam deficits, you could take the monetary aggregate, divide by those number of ounces, and you came up with a $35 reference price, which is what they had, they set it at Bretton Woods. Okay, same math, broad monetary aggregate, 261 million ounces, $80,000 an ounce for full coverage. It's nuts, right? It's just, now you don't need to have full coverage to be on a gold standard. Yeah. There are many successful gold standards that have worked at 20% coverage or 30 or 40% coverage. But the point is, even 25% coverage would imply a $20,000 an ounce gold price, which is a long way from 2,700. So gold, if gold is going to be used as money again, it is deeply undervalued, deeply.
For Lepard, the ultimate solution lies in a return to sound money principles. He sees gold and Bitcoin as pivotal in this transition, advocating for their use as neutral reserve currencies. He believes this shift is necessary to end the cycles of inflation, debt, and economic instability that have plagued generations. Lepard also emphasizes the moral imperative of adopting sound money to ensure economic stability for future generations, shielding them from the destructive cycles perpetuated by fiat systems.
Right now, debt to GDP in the United States is about 124%. And we've got a fiscal train wreck going on, and the government, what happened is the government spent a lot of money during the COVID event, and they never cut back. In fact, they stepped on the gas. And so we just finished a year where they spent $6.75 trillion, which is almost as much as they spent in the peak year of COVID. And we've got an economy that's full employment, close to full employment. And we've got, a stock market that's at record highs. And of course, they did this to try to win the election, and they weren't successful. But I think that's part of the reason why they were so profligate. And, really until Trump won, and now they've created this Doge committee, there's been zero discussion about the debt problem. But it's a big problem. It's going to cause serious economic issues in the next year or two. As you know, this Doge committee, Ramaswamy and Elon have decided they're going to try and cut $2 trillion in annual costs. And, my response to that is good luck. I'm all in favor of what they're trying to do, and I do believe they will cut some costs, no doubt. There is some government fat. But as I said in the speech I gave here a few days ago, 80% of the money that's spent by the federal government is in the big four categories, which are Social Security, Medicare, defense, and interest. And so those are very hard to touch. Go after entitlements, that's like the third rail. Defense, maybe they'll take some money out of that if they get peace in the Ukraine. But the interest costs continue to ramp every year, and defense is pretty untouchable as well, although maybe they'll be able to cut something there. The remaining 20% is the rest of the government. And even if they take a hatchet to that and cut 30% of that, it's a couple $100 billion a year in savings. In a year where, last year they ran 1.8 trillion in deficits, and this last 6 months annualized, the deficit run rate right now is $2.4 trillion. So, let's just say, give them their due. Maybe they cut $400 or $500 billion, and that would be hard to do, but maybe possible. It would still only take you from 2.4 back to where we are now, 1.8, 1.9. And the point is, the slope of all the curves is accelerating very steeply. Interest cost, federal spending, deficit, et cetera. And this is going to lead, in my view, as I've said many times, is going to lead to a sovereign debt crisis and a currency crisis. And you can already see that. The evidence that that's taking place is that Bitcoin's at record highs and gold's near record highs. And I mean, gold was at a record high just recently, just backed off a little bit. But, gold started the year under 2070, and now we're playing around with 2,600, 2,700. Bitcoin started the year, at 58, or well, no, actually it was even lower than that, I believe, but it was at 58 for a big part of the year. And of course, now we're pushing up against 100. So these two sound money assets, sound money alternatives, things that could be a neutral reserve currency, they know it. They can see the problem. And they're responding.
So what do you think?
It's a mess. It's a real mess. And this is a fiscal mess without the stock market or the economy being in trouble. I mean, the last two times the stock market went down substantially in the 08 bust and in the 2000 bust, you had enormous deficits following it. And you had an enormous unemployment following it. And so if our stock market gets broken at some point, then I think I'll move into kind of the next point, which is I think we know how the Federal Reserve is going to have to respond. And I call it the big print. I mean, they're just going to have to, go back to QE, go back to ZIRP, maybe do yield curve control. I mean, and we're already starting to see that. I mean, I find it extremely interesting that the bond market, here they are, they've cut interest rates, and yet the longer bond, has gone up since that interest rate cut. And I'm kind of like, wow, how did that happen? Doesn't make sense. My belief is that the country has been ruined by inflation and the Federal Reserve and unsound money. And my further belief is that we need to return to sound money. And so the people in the gold camp and the people in the Bitcoin camp, we're all working for the same thing, which is to get rid of the Fed and to go to a neutral reserve currency that's sound so that our kids and grandkids don't suffer with the cycles that we've all suffered with.
Lawrence Lepard's analysis provides a sobering yet hopeful perspective on the financial challenges of our time. While he acknowledges the gravity of the current fiscal and monetary crises, he also highlights the resilience of sound money assets like gold, silver, and Bitcoin. His call for a return to sound money is both a critique of the status quo and a roadmap for a more stable financial future. As investors and citizens, understanding these dynamics is crucial for navigating the uncertain terrain ahead. Whether you're a seasoned investor or new to the concept of sound money, Lepard's insights offer invaluable guidance for protecting wealth and fostering long-term economic stability.
Please like and subscribe my channel.